Hi, I'm Rob.
And I'm Rob.
And this is Ask Rob and Rob.
Welcome to Ask Rob and Rob. We are back once again. It's a lovely sunny day. Well, I hope it is. I have no idea what it is when you're listening to this, but it is while we're recording. And we've got two questions today from Rick and Luke heading your way. But first, if you'd like to appear on this show, how do people do it, Rob?
It's very simple, Rob. Very simple indeed. You go to propertyhub.net/ask, where you'll be able to leave a voice message through your computer. You can access the phone number and leave a answer phone message that way if you prefer. Or if you want a written question and you potentially want to appear in the Sunday Times, then the links for that are available there as well. So that's propertyhub.net/ask. Now, luckily, Rick has followed that process to a T and given us a great question. So let's have a listen.
Hi, Rob and Rob. Rick here from Leeds. First off, just want to say a huge thank you for all of the podcasts. I got into property investment last year and I couldn't have done it without all the free content you've created. Property investment content can be a bit of a minefield, and I found your podcast to be one of the only bits of content out there focused more on education rather than selling you the dream. So big thanks for all your work on this. My question today is around investment strategy. I work full-time as a director and a co-founder in a few tech businesses in the UK and Europe, and my business partner and I set up a new limited company last year and purchased our first buy-to-let, which has gone well so far. This summer, I'm going to have approximately 50,000 to play around with of my own cash, and I plan to set up another limited company on my own to start a separate portfolio to the one I have with my business partner. The property my business partner and I purchased last year was a 2-bed terraced in West Yorkshire around the 90k mark. While the yields are good, with an ROI of around 7%, and we're expecting some capital growth, it isn't likely to rocket up in value anytime soon. My objectives with the new portfolio are to generate a yield, but most importantly, to make the most of my capital to accelerate the growth of my portfolio and number of properties as quickly as possible. I will have access to additional capital in the future from other avenues, but this might not be for a couple of years yet. So I need to make my investments as efficient as possible to allow me to invest in more properties quickly. If I'm creative, I can probably purchase 2 more properties like the one I bought last year with the 50,000 I'll have available. The pros are these types of houses are in areas I've already done a lot of research in and had some success with already. The yields are good and there'll be a bit of capital growth. I also have close friends who are much further in their journey than me who have followed this exact strategy who I can call upon for advice. However, I'm a little worried the value in the properties won't increase quickly enough to meet my objectives. My question is, would you continue with the same strategy, buy multiple properties with my cash and see where that takes me? Or would you look at a different strategy, perhaps a slightly more expensive property, and just buy one to start with? If so, what type of property would you look at and where? Thanks again for all your effort on the podcasts.
Thank you, Rick. Great question. And what I think is great is that you've identified that your first property may be a good starter, but when you look at your strategy and your long-term goals, it might not be a fit, but there are advantages to carrying on. And this for me echoes how Rob and I approached our portfolio growth. And actually, you've been a lot better because, and hopefully you've learned from our lessons by listening to our content and reading the stuff that we put out, but we pivoted much too late into the strategy that we eventually did, which was more high-end capital growth type properties. Now, it's not to say everyone should copy what we do, but the point is that we identified probably too late that we should have pivoted. And you are assessing your situation really early on, and I think you should be congratulated for that. So well done. It's so easy to carry on with what you've done before because, like you've pointed out, there is a lot of things in your favour to carry on as before. It basically is the easier option. You've got the network, you know other people have done it this way, you know the area, it's the easy option. And without knowing you and your life situation and your goals in all detail, I can't say for certain that you shouldn't do that. But based on the fact that you want to go for capital growth and you've acknowledged that this property may only give you some capital growth, and capital growth is really important to you and your strategy, I would suggest that you take a serious look at going for the capital growth play and moving away from what you've done before. Now, if you can't find a deal that works for you for that type of strategy, for some reason you just can't find a property that's at a good price in a good area that has good capital growth potential, I'm sure you can, but let's just say you can't, then by all means go back to what you've done before, because making an investment is better than making no investment. But the chances are, I'm sure you can execute your strategy and go for that capital growth play. So that is what I would do based on the information given, is take into account that you've acknowledged that doing more of the same won't get you to where you want. And although it's easier to do more of the same, do the harder thing, move your strategy on, make that step. And although it'll be slightly more uncomfortable to do so, hopefully it'll be well worth it if you get it right. And I'm sure you will.
Okay, let's see what we can do now for Luke.
Hi, Rob and Rob. My name's Luke. I have a question regarding the rights of leaseholders. So I currently own a leasehold property and I'm disputing the service charge costs. I've requested from the freeholder a copy of the accounts and the breakdown, and they've provided that. Before making payment, I would like a further breakdown. Ideally, before making payment, I want to see copies of the individual invoices and receipts for the maintenance costs. So I just wondered, as a leaseholder, do I have that right to request that information? Does the freeholder need to provide that to me before I make payment? As a side note, my service charge has quadrupled in price this year, and the agent isn't being very helpful as to explaining as to why. So that's how it's came about. So thank you very much for everything you guys do. And yeah, appreciate any answers you can provide. Thank you.
Luke, thank you for your question. And we did do an episode recently about leasehold in general. So if you haven't listened to that one yet, do go check it out because it's got lots more information that may be helpful to your situation. But the direct answer to your question is yes, you do have the right to inspect individual invoices and receipts, which is what you've asked for. So when you receive the service charge demand, you should get a summary, a kind of a high-level breakdown of the different areas that your charge covers, such as lift maintenance and insurance and groundskeeping, that sort of thing. And if you don't get that breakdown, by the way, then the service charge can't be legally demanded because they do have to provide that. But it sounds like you have received that and you want to dig a bit deeper. Well, in that case, Section 22 of the Landlord and Tenant Act 1985 is your friend, because this is what gives you the right to inspect documents relating to the service charge within a period of 6 months after receiving that summary. So all you need to do is write to the freeholder or their managing agent under their section of the Act saying that you want to see all this stuff, and they should arrange that for you within a month of receiving your letter. And if you Google something like Section 22 Landlord and Tenant Act template, then there are various websites where you can download a template letter that will start you off. While this is going on, you might be wondering, well, if I don't think I should be paying this service charge, I think it's too high, should I pay it or not? Or should I withhold payment if I'm not happy with what I'm being asked to pay for? And that is a little bit less cut and dried. There will be penalties for late payment or non-payment, which will be set out in your lease. So it might be worth looking at, well, what could happen if I end up paying this late? But something else you can do is pay under protest, which may make it easier to challenge it later because they can't say, well, what are you talking about? You paid it. And to pay under protest, it's very easy. You just need to send a letter along with or at the same time as your payment, making that clear, saying why, and saying that you have the right to dispute the charge later. So that is the answer, Luke, but I imagine that's not going to be the end of your questions. So do check out the Leasehold Advisory Service, which offers a free telephone advice service. You might find a quick call with them at some point during the process to be pretty helpful. But good luck getting this sorted.
Well, that's us done for another week. Thank you for your questions. Thank you for listening. And if you've never asked the question yet, it's now the time. Well, remember, propertyhub.net/ask is the place if you want to get your question in. We'll be back same time, same place. But before then, we'll be back on Thursday with the Property Podcast. And we'll be appearing in the Sunday Times, answering more of your questions. Check out the home section if you want to see what we're doing there. But until then, take care, have fun. Bye-bye.
Bye-bye.